Hey guys, just take a look at the price action from Friday on the quarterly contract. This is a daily chart for the Emini. And so I've got the quarterly contract separated into weekly and, or yeah, 12 week and 3 month. Calculate from the open and close. So 3 month and 12 week. And that's about it. The volatility measurement at the bottom is a threshold. And you can see when the market is contracting the range because the slope falls versus expanding the range, and that is when the slope rises. And you can see that the slope is rising because you have your threshold, and it's pretty easy threshold to understand because you go to 100 on the daily, and that is your normal distribution. So you can do a lot with this information because I've bound it where it can actually be used. And so you can see the threshold levels correlate to percentages of the normal distribution volatility, and or they're inside the range. And you can also do further statistical analysis, inside the range if you want to see where half of it is, or just go ahead and put your 3468 and just take a look at it that way. And so you can see that when you get to that standard deviation, it comes back. Pretty cool. Pretty cool. And if you are above it, there's the 34. Um, you can check standard areas like the 50 and see if that, is your boundary that you can use for your algo. So you can use these levels in your algo with the PT2 indicator using Bloodhound and Blackbird. So you could design a strategy that only went, long vol between 50 and 70, if you wanted to do that, or only short vol between 50 and 70 after it has been above 70, short vol between 70 and 50. So you could, you know, set something up to do specifically that. Yep. So whether you're going up and down, in or out, and where are you in the normal distribution can easily be calculated. I mean, you just put the PT2 on the chart and look at your thresholds and see where you are that way. And right now we hit 100 and we're pulling back. And we're pulling back from 100 at the time where the distribution was at the quarterly 3. So remember, I have 12 week and quarterly 3. The quarterly 3 on the close is, you know, really a algo that many people will be calculating, right? When they do their historic volatility calculations. So that was a key area for me for many reasons. We were at OPEX, and if it were going to start, selling off when it bounced off the 1, this is a 12-week one, and that was acting as resistance, as well as the quarterly 2, and then the 12-week one. So it just traded in this range between the 3 and the 2. The 3 of the well, the 2 of the 12 week and the 3 and 2 of the quarterly. I'm sorry, but losing my train of thought here real quick. So it's coming back in, and we're going above the quarterly 3. So everything, the stars were aligned for this pullback. If you were going to start the beginning of a larger move, this would be what you were looking for, and you've got, a very close edge to that 100. So anything above 100 and short should be, sold. But anything lower coming back in above that quarterly 3, if it's coming back in, you're decelerating. So it comes back in, and do you see this? It goes up. So that's what I'm looking for it to go up from here if it continues to decelerate. And we're just at the start of this move. So I don't know if it's going to decelerate or hit, this 2 again and double bottom back down. I mean, we don't know what's going to happen. Powell could open his mouth and say, I'm really, really, really going to just raise rates to 100 and, F you. I don't know what he's going to say. But we do know that they responded at the quarterly 3. So the quarterly 3, 36.79, is a pretty good sand, right? Line in the sand. And it hit that daily 1, and bounced beautifully on it Friday. So just below the quarterly 3, 36.42.57 actually hit the line. And this is the weekly coming into a little bit of resistance here. 3,800 obviously is a big, bullseye target. But the monthly is interesting because there's plenty of room to go between now and the end of the month. So if we got a little bit of a, relief rally on this, we have some upper targets to trade to, and that would be interesting. So 38.14 is the quarterly 2, and monthly 2 is just above it at 38.49. So I would say that that would be a pretty good first upper target to try to reach 38.14 to 38.49. Of course, anything below that monthly 1 of 37.21 would be a big um, bearish signal as they're putting it back inside the monthly distribution. Right now, I'm going with my thesis that if it leaves the 1, it's going to go to the 2, right? So we'll see. It's got to leave this 1 also and go to the 2, quarterly 3, 2. So just follow the distribution. That doesn't mean it's going to go in a straight shot. The market pulls back. That's why finding your sweet spots is so important for making a decision on what would be a good entry. And the dailies are fantastic for that, as Friday showed. Tagged the daily really well. But, you can see that the standard Globex ones, daily ones are or 2s or 3s are good places to come in. This is a Globex with daily 3s. And I want to go back. Before I show you this chart, I want to come back here and show you the strength of these levels. The distribution very rarely falls below the 12 week or the 3 month. So you will not see a candle close below this. And I just wanted to maximize that and show it to you so we're all on the same page, that you can see that it is very much respected in the market. The market needs structure. Um, calls are okay. Obviously, I'm talking about puts. The market sells puts. If it goes above the one, they're buying calls anyway. They don't care if it breaks and goes higher, right? They're already in calls above the one and going to the two and the three. And then if it breaks the two and the three, then you can put your, measured moves and trade targets. But otherwise, the ones are great places to come in. The market makers love the ones on all these time frames. Uh, Everything. This was COVID. So, COVID, they just picked up the phone and said, "Get me out of my account," right? There's nothing you can do with that except try to do a measured move and see if you can make that your target and then assess what the market does at that point. So here's your one time. And as you see, it dipped a little bit further than that, but there was your buy the dip. It dipped below the distribution, and they started buying it and drove it all the way up. And look where it went, right to the top, and came back in. Do you see that? And they bought this one. I mean, there are, structures to these levels that seem to match the flow of the market. Here, we broke the distribution, and I wanted to explain this to you. This is Powell's first attempt at QT, right? And they sold it into Christmas and then bought it, where he called Uncle. But he took it all the way to the end of the Christmas rally. He took it below the three. And then they, you know, were buying the range. Right there. See what I'm saying? This is algorithmic. I'm looking for my, brain. Okay, over here, what is this? This is more Powell pain. This is when Powell first got into office. Everybody remembers that. And then he messed up and let it go underneath again right away and screwed up again. And then he got on the program because you have to have structure in the market. You've got, 60% of the market is comprised of pension funds and 401ks and profit sharing plans. You can't have Powell pain all the time. I mean, the market needs to be supported because there it would go off the rails all the time. So that was COVID. That wasn't his fault. But the other two instances were his fault when he first came into office, and then he let it slip that first year, at the end of the year, when he tried to do the QT the first time. So that is why I, make a long story short, was so bullish on this quarterly three. I kept thinking there's no way he's going to F the same mistake twice, right? And then he let it go to the weekly 12s. That second standard deviation got bid hard. Look at that. That is a hard line in the sand, and that is your 12 week. So, and now it's up to the 12-week one. So, the very methodical, algorithmic um, method to the market, and I'm showing you what that is. So what we want to see is a break above this one to come up again, like I said, to this next resistance level, but ideally go back inside the value. So here is your value. It's from 37.64 all the way up to that top line, 43.20, whatever, 6, 25, 45. But here is the middle. And if the Fed would get off their, pain train and let the market just come in here into Christmas, that would be lovely, I think, for everybody. I think everybody's ready for it. So, will he send it, crash it again? I mean, does he really want that on his, legacy? That Powell couldn't keep it inside the distribution? I don't think so. So that's why I was so bullish. And so when um, the daily one opportunity came, it wasn't just me, but there were a lot of people very happy right there. All right, guys, that's all I've got for you. Thank you so much. Appreciate you, and we'll talk to you soon.